Hello traders, morning video, start the week off with. I'm working the rest of the week, so this will probably be my only video this week. But there is a lot of risk in this market, even though the futures are not showing it up so far this morning. And the problem child is the industrials. The Dow Jones and the industrials. Those are the areas that look like they want to break the 50-day moving average this week. So keep that in mind. I'm going to start out with Ask Slim does a free weekend video, which I encourage all of you to check out and everything. And he featured this chart, and he did an inverted showing of how the margin debt versus the stock market, how it has widened, how far widened it is right now versus historical. And when we get a real widening between the two performances, typically you got the tech bubble, you got the housing crisis. Well, now you have the Fed bubble, and so it's a very risky situation for continuation higher in this market. So just keep this one in mind, that there is a lot of margin debt that will have to be covered if the market starts to sell off here. I'm going to start with my broad indicators, and what I like to generally look for to identify a change of tone in the markets are dual support or resistance areas on different time frames. And right now we are barely holding on to the 20 SMA on the weekly on our Wilshire 5000, and as of last week or last Friday whatever, we have started entering the cloud on the daily charting for the Wilshire. Okay, so keep that in mind. We're getting a dual change of character in a broad 5,000 stock index. Another broad one which I like to look at, which is basically given the same type of charting pattern, but this is the NYA New York Stock Exchange Composite is giving a more giving a better tell that there's a change of character in the markets. We have a flattening of our signal line, and we're barely holding on to the 20 SMA on the weekly, and we've already crossed over on our MACD with a negative histogram tick. So very dangerous, and we have entered the cloud on the daily for the NYA. So that's giving you a dual read on two different time frames of potential reversal signals in the broad composites. Now, so far the indices look like they're going to open in value, but I did want to point out the diamonds, which is a Dow component, is actually performing the weakest so far this morning. So just keep this in mind, that the diamonds could be leading the way lower today. And this should be quite concerning here about the diamonds. If you can see on your daily here, we are right on that 50-day moving average, threatening a breakdown of the 50-day moving average. So keep this in mind, that we are in a very dangerous territory for the diamonds. And as of Friday, they were distributing or getting out of the diamonds yesterday afternoon. So keep that in mind. Okay, some concerns here. The industrials, like your Wilshire and your NYA, it is officially, as of Friday, crossing into the cloud on a daily. So this is going to be a problem child for the week, is the industrials. And the autos last week really impacted and the auto suppliers really impacted the industrials. So keep this in mind. We might be ready for a cliff dive on these markets. So our histogram is still negative, and our signal lines could very easily be turning negative here. So I just want to point this out, that there's a lot of risk here, and even our RSI is under 50. So I mean, this is actually setting up for a more bearish tone. So just keep this all in mind here on your industrials. Now on my ratio charting, I've been showing that the gambling stocks versus the industrials, and it's been outperforming, which may continue to be the case. I do want to point out, as of Friday, we're crossing over our signal line on the daily. suggesting there could be some downside pressure in our leading sector in the industrials. So just keep this in mind. There's a chance for a change of character in the gambling space. And also in the industrials, we did get a pop in the defense sector because of the bombing of Syria there Friday. But I personally would have liked to seen a more pronounced pop to suggest there's going to be continuation on the weekly chart here. So just keep this one on your mind. It kind of looks like we're getting a bottoming process on our MACD, but we are absolutely neutral on the RSI. So just keep this one on your radar. Heavy construction. This is a Trump darling, and I'm concerned here that we're getting rejection of not only the 200 but also the 250-day moving average on higher volatility. So we even had some increased volume there Friday. So just keep this one on watch here. We are actually under 50 on our RSI too. So this is an infrastructure sector, and here we are. We're going under 50 on our RSI, so it's not a overly bullish situation. Another comparison I wanted to point out here is how bad the trucking industry was underperforming last week. So just keep this also in mind. We had this trending on this relative ratio that it looks like this is a component of our transports that the trucking industry looks like it's wanting to break down here on above average relative volume. So, and this is one of the most telling charts of the markets, and this is the industrial suppliers index, and this got just creamed last week on the auto numbers that came out, and this is a very bearish chart pattern setting up here, and it's a leading indicator of the industrials in general. So just keep a very close eye on this chart. It really does look like we're getting some significant weakness setting up in the industrials. And another major tell, like I mentioned, the industrial suppliers. If you do a relative comparison to the industrials, what really stands out is the above average volume that started picking up last week. This is a leading indicator that there's some distribution starting to happen in this sector. So just keep that in mind, that it looks like these lofty valuations for a lot of these stocks are going to start coming in here real soon. One theme to really keep in mind this morning, and that's your 10-year bonds. So far, the futures are seeing a sell-off in the bonds that's persisting from Friday. And value as of Friday, most of the day's volume was higher, and we are opening down below value, and that should put a natural bid in the financials on the open this morning. So just keep that one in mind. We're probably not going to fall out of bed too fast this morning, but I am bearish in the markets. Just keep that in mind, and this is the thing that's happening the most this morning, it seems like. Okay, well, that's all I got to say, and good trading, everybody. But be very careful to the upside, because the industrials look like the valuations are too high, the price to earning ratios are too high, and that whole sector looks like it's ready to come in. Thanks a lot.